Hello students, this is your teacher Usman Ali and I'm recording the video for the solution of exercise 416 of the irregular items related to the income statement or retained earnings. Okay. In exercise 416 is regarding the company Ronald Incorporation. The data is for the year 2007 and it says that the income tax applicable to income from continuing operation is $1,87,000. So this is the tax which is applicable on the business income of the company. So that's not the income amount, this is only the tax amount. Okay. Then it says income tax applicable to loss on discontinued operation $25,500. So actually this is the tax adjustment which must be done on the discontinued operation losses. So that's not the loss amount. Actually I have already colored it, highlighted it with the same color so that you can match it quickly. Actually the loss on discontinued operation is $75,000 and the tax adjustment of this will be $25,500. Okay. Then we have income tax applicable to extraordinary gain $32,300. Actually that's the tax on the gain. Actually the gain is $95,000. So on the $95,000 gain, the tax will be $32,300. Likewise, income tax applicable to extraordinary loss $20,400. So we had a loss also. Okay, and the tax on that loss is $20,400. The actual loss figure is extraordinary loss 60,000. So 60,000 is the actual loss and 20,400 is the tax on this loss. So we are in this numerical, we are not given with any tax percentage. We are given with directly we are given with the tax amount here. Okay, so remember this thing. Other than this, we have information related to the unrealized holding gain on available for sale securities $15,000. We would discuss this thing when I solve the part C. I will have a little bit discussion on that, but not right now. Administrative expense $240,000, rent revenue is given, dividend is given, retained earning beginning balance is given, cost of goods sold $850,000 is given, selling expense is given, and sales revenue is also given. Part number 1 is we are required to prepare the multi-step income statement. Now in the solutions which I have uploaded to your portal, I have solved it with the single step technique actually, and here I will do the multi-step, so you will get both of the techniques done actually. Okay, now as we have been practicing the multi-step income statement a lot and you are in a very good situation now that you can directly pick things. So what I have done, as the numerical is long, okay, because it has 3 parts, so in order to shorten the time and save the MBs, okay, I have partially solved the numerical till the income before discontinued or extraordinary item adjustment. So we have here sales revenue minus cost of goods sold is equal to gross profit, and then operating expenses of selling and admin expenses, we got EBIT. Then I added non-operational revenue, which is rent revenue, and then earning before tax. Then the tax expense of $1,87,000 is actually subtracted, and we get a $3,63,000 net income. Now we cannot call this as net income, you know that, because of our basic videos. Why we cannot call it? Because we got discontinued and extraordinary gains and losses present in our numerical. So if we do have, then we cannot call this as net income. We should do the adjustment. So what this is then, income before discontinued and extraordinary items adjustment $3,63,000, and it is from this income we will adjust discontinued and we will adjust extraordinary. Now if you remember our one of the video on the adjustment techniques, there I have discussed it that when you have both of these problems, discontinued and extraordinary item are present items, so you are supposed to first adjust the discontinued operations and then you will adjust the extraordinary. So let's first subtract the discontinued operation. Now if you remember from the question, I highlighted it with the pink color, the discontinued operation. This is a loss, so loss means minus. Okay, so loss from discontinued operations, I will write in short to save time. Okay, That's a $75,000 loss. If you can see here, $75,000 loss. This is the loss, and that's the tax, 25,500. So I will write here tax adjustment minus 25,500. So we will subtract it. When we subtract it, we get a value of 49,500, and that is minus. So we will minus 49,500 from 3,63,000. The remainder is $3,13,500. Now discontinued is adjusted. Extraordinary items are not adjusted. So I will write here income before the extraordinary items adjustment. Okay, and now I will adjust. So first I will adjust gain. If you remember from the numerical, we had a gain, extraordinary gain, and we had a loss also. So I will adjust gain first. Okay, extraordinary gain. What is our gain amount? The gain amount was $95,000. By the way, I have uploaded all these questions in your portal as well. Okay, solutions but as well as questions, so you can even print out the questions while I'm solving it. You can have question in front of you too. Okay, and then I will go for the tax expense. This is not an adjustment because it is a gain. So the tax expense is 32,300. Just for record, I will show here the gain was 95,000 and the tax amount of the gain is 32,300, which are written here. So I will minus this, and the remainder we get is 62,700. Okay, and then I will adjust the extraordinary loss. The extraordinary loss amount, let me show you first. This is the loss amount 60,000 and this is the tax 20,400. So I will write here 60,000 first, and then I will write the tax adjustment. It will be an adjustment because it's a loss, 20,400. I will subtract this and we will get 39,600 loss. So that's plus and this is minus. So 3,13,500 plus 62,700 minus 39,600. This will give us a figure of 3,36,600. Now very confidently we can call this as our net income. Okay, so this is our income statement using the discontinued and extraordinary items here. Okay, so if you see here, majority of the portion is done actually, and that's the multi-step income statement. We do not have any other irregular items here, like we do not have any change in accounting principle, change in estimate. We do not have any unusual or infrequent item. Okay, so we do not have such special income statement items. Only discontinued and extraordinary gains and losses were given to us actually. So this is the part A of our numerical exercise 416. Let's do the second part of that. Now if you see here, the second part is to prepare a retained earnings statement for the year 2007. So I have already made a bit format for us to save us a bit time. So this is the starting format of the retained earnings statement. Now if you remember from our previous videos, every single retained earnings statement starts with a beginning balance. So I will write here beginning balance of retained earnings statement, okay, as on 1st January 2007. Okay, so the beginning balance of this, sorry, really sorry, okay, So the beginning balance of this is retained earning 1st January balance is $600,000. So I will write here $600,000. Now if you remember from our previous exercises, we used to do the adjustments of change in accounting principle and errors and omissions here. We do not have any such things here, so that's it. We do not need to do any adjustments here. If we don't need to do any adjustments here, this is already an adjusted value then, and then I will proceed. So after that, our next step was actually to plus the net income if there is any income earned during the year, or minus if there are any losses incurred. Okay, so from our previous part A, the net income which we calculated was $3,36,600. So I will plus it here, $3,36,600. Okay, and then we will subtract if there is any dividend paid actually. Okay, so let's go back to the numerical. If you see here, cash dividend declared and paid $1,50,000. So I will write here $1,50,000 minus. So it will be like 6 lakh plus 3,36,000 and minus 1,50,000. So it will give us a figure of $7,86,600. This will be the retained earning ending balance. Okay, as on 31st December 2007. So this is our retained earning statement, ladies and gentlemen. Okay, now we have a third part here, which is exercise same exercise 416, and the part here is part C, which is actually to prepare a comprehensive income statement. So let's very quickly prepare the comprehensive income statement here. The name of the company first, and then I will write the name of the statement. So this is comprehensive income statement, and that's for the year ended 2007. Okay, now ladies and gentlemen, comprehensive income statement is something which is little bigger than the normal income statement actually, because we try to adjust some comprehensive incomes here. Okay, what type of comprehensive incomes can be adjusted here? Incomes like, if you remember, one of a word or account I have introduced there by the name of unrealized holding gain on available for sale securities. Now I will explain what is unrealized holding gain, but available for sale security, for time being we will not discuss it, because in our chapter number 4, which is after this, we will discuss this thing, available for sale securities, trading securities, and we're going to discuss these things a lot. So because there are some accounting treatment differences among them, so we will discuss them in its own turn. But right now, unrealized holding gain actually means, so let's say you had purchased the marketable securities of different companies, and let's say you purchased it at $20,000, and around 6 months back the market has gone very good, and the prices of all those securities which you have purchased has gone high. Now its worth is $35,000 instead of $20,000. So you purchased it on $20,000, and currently it is available on what you say $35,000. So 35 minus $20,000 is equal to $15,000 profit. But this profit will become actual, would become real when you will sell it. I have no plans to sell it right now. It's just that this is the last day of the year and I must update my accounting records. So I just wanted to know that what is the current market price of these securities actually, and I came to know that the current market price of the security is 35, not 20. So according to the accounting standards, I must update it from $20,000 to $35,000. So this $15,000 increase in the value or in the price of this is actually called as unrealized holding gain. Okay, unrealized. Why it is called unrealized? Because I have not sold it yet. When I sell it, then in reality, in actual, I will earn it. Okay, so this unrealized holding gain $15,000, it has not been earned. Remember this thing, that makes it little special here. Now, available for sale securities, for time being, just keep that in mind, that it means that these securities are available to be sold and I will sell it shortly. Okay, so this is the overall concept, $15,000. Now, when you are trying to prepare a comprehensive income statement, so every comprehensive income statement starts with a figure of net income, which you can get from the basic income statement you have prepared for the organization. So if we go back to our part A, the net income we got is $336,600. So I will write here $336,600, and then I will plus or minus other comprehensive income. Okay, now we do have an income here. The income was actually called as unrealized holding. So holding here means I have not sold it yet. Unrealized means it's not real. When I sell it, then it becomes real. Okay, and it is a gain, it's not a loss. So I would write that amount here, $15,000. This will be added with the net income, and I get $351,600. This would be actually called as comprehensive income. Comprehensive income. Okay, this is my comprehensive income here. So the overall thing is that, okay, sorry for the interruption. So I was discussing this, that our comprehensive income is 351,600. So our readers know that actually we have, not actually, but our income is this much. But out of this income, 336,600 is that income that we have earned it. Okay, actually, like that's kind of real income. And $15,000 is that income which is not real, or which have not been realized yet. It can only be realized if it is sold. Okay, the security is sold. And do remember this point, that this $15,000, it's not the final income. Okay, maybe we sell this security after 15 days from today, and maybe the price of the security has even gone more high, or maybe the price of the security have gone low. So in both cases, actually, like there could be more profits, more losses, anything can happen actually in the future. So that's why we cannot mix these things up here. And then the next thing is, it depends on the management strategy, that what they have plans to do with such kind of securities. So, but we will discuss this topic, this point of unrealized holding gain and losses, available for sale securities, and then we will discuss trading securities also in the next chapter with quite detail, that actually what they are and what are the accounting treatments are done for this. So this is the exercise 416. We prepared a multi-step income statement, and then we had adjustment of discontinued operation, extraordinary gain and losses. Okay, this was the gain and that's the losses. Then we prepared a retained earning statement. Actually, in the retained earning statement, there was no adjustment needed, because nothing was given to us related to retained earning, means no adjustment information was given to us in the question. And then we prepared the comprehensive income statement, which is a kind of an extended version of the income statement. So we got the net income value here, and we did the comprehensive income calculation. One thing before I wanted to sign off, if you prepare an income statement and then right after writing net income, and you write here this other comprehensive income, like if I directly write it here, other comprehensive income, and then I write here unrealized holding gain plus 15,000 is equal to 350. So then the whole page can be actually called as comprehensive income statement here. Even you can make it like this also, like reproducing all the calculations, all the accounts. Okay, so thank you very much, ladies and gentlemen. Stay safe.